The big story, of course, is the IDFC Bank merger, long-awaited one. The merger ratio, etc., being announced. Stocks reacting. IDFC First, by the way, of course, was lower, and IDFC has given up gains. It made a high of about 115, and I think it's now absolutely flat. I'm talking about IDFC Limited as well, which has given up gains. We have the management joining us to take forward that conversation. Mr. Vaidyanathan is Managing Director and Chief Executive Officer at IDFC First Bank. Mr. Vaidyanathan, good morning. Great to have you with us here on the program here at CNBC-TV18. And congratulations. Long awaited, finally done. Could you tell us what are the next steps? I mean, as we as we look forward for the consummation of this merger, what are the next steps?
First of all, yes, we are all very happy that we are over and done with this, and there is a very clean corporate structure, and now we can look forward to building the bank going forward. With regard to your question about what is the next step, frankly, we got to go through the process. We got to take approval from the regulator. We got to go through NCLT, go to shareholder for approval. But we believe all that will follow will get done hopefully in 9 to 12 months.
Okay. Well, Mr. Vaidyanathan, good morning. And again, as you said, congratulations on simplifying a structure. But long overdue, isn't it? What went into all this thinking? Why the delay and what were the considerations?
Well, the main consideration is to how to find a fair value for all shareholders. And, there was a certain holding company discount in IDFC Limited. IDFC Limited holds about 266 crore shares of the bank, and they have issued 160 crore shares. So the intrinsic value is about 1.66 shares of IDFC Bank for every shareholder of IDFC Limited. On the other hand, there was a market price. On the other hand, there's a value for IDFC Bank. There's a comparable value. We'll go through all these processes. So you got to find a statutorily, a process that is accepted statutorily and in compliance. So all the process took some time.
Okay. Well, there was one shareholder complaining to me on a message that the 6.1% holding company discount would mean that the government gets 6.1% less. They would have got, 2.62 crore shares now of IDFC Bank, whereas they should have got perhaps more than that, 6% more than that. No complaint from the government on this, was there?
No. So first of all, to correct your numbers, they are getting 1.55 shares per share of IDFC Limited. Against the intrinsic holding 1.66. So but to your question about government, well, we respect the holding of government, and there is also other shareholders. There are also minority shareholders. That's why the process works in such a way that's fair for everybody and all shareholders. And to the point of that's how let me leave it at that. And by the way, government has also holding an IDFC Bank. To the extent of about 4%, about 16% there. Government is broadly neutral, just to put it like that, broadly neutral. Because
I'll just say, I think I'm splitting hairs over here. They would have got 43 crore shares without the 6% discount. Now they get 40 crore shares. Anyway, I was just wanting to know if the government said anything. Okay, now,
and they're on both sides, not the mother.
Okay. Anything you heard about the MSCI inclusion? I think Nuvama has put out a note. That will mean much easier ability to raise capital. But any clarity on that?
Well, we consider it our privilege. I think it's a huge moment of our lives. If an event like that happens, we are told we are a few percentage points away from getting to that landmark. And because once you enter the MSCI index, there is a certain amount of flow of dollars that comes in the stock. In the last research report from Nuvama I read was that about $170 to $180 million of purchases will happen in our bank once that happens. Now, I'm not an expert at all these things, but I'm just saying that it will be fantastic for the bank to get that kind of stature to be as part of MSCI index, an arrival of the bank, let me say.
Okay. Now, how does life become easier, or how does it change for the management? You don't have a big shareholder now. Does that mean more elbow room?
Well, in any case, if one entity has 40%, if you've got to have a resolution for, say, raising capital, you need specific support of that block of shareholder. And by the way, we had a good relationship with that entity. But nevertheless, you still need those approvals. You need resolutions to be cleared, and you need one entity holding that kind of a voting block. With this process, what will happen is that becomes, the shares get distributed IDFC Limited. It's a very diversified public shareholding, institutional shareholding. Think of it like that. So you're able to raise capital from time to time, just from the market, like how ICICI or HDFC, they all raise from time to time, and they keep going. It's good, in that sense.
Congratulations, sir. Rima here. Just want to get a sense about the capital position. Will you be getting any capital from IDFC? What will be the cash on the bank's book now post-merger? How does your capital adequacy change? And post the merger, you even spoke about it's becoming easier for you to raise money. Would you be looking to tap the markets and raise some money? Just give us the overview on the capital and the cash.
Yes, that's an important point, by the way, because apart of, we're paying this ratio of 1.55, but you should also remember that IDFC Limited has approximately, give or take, about 600 crores of cash, which we're expecting to come as part of the merger into the bank, into the merged entity. Now, to that extent, the capital of the bank goes up as part of the merger, and that is already factored in that price. So, in that sense, it's to specific, by the way, on your question on capital adequacy, our capital adequacy is now. We just raised some Tier 2 capital last week, by the way, of 1,500 crores. Our capital adequacy has become about 17.4%. With this, we'll get some more capital. And of course, raising capital becomes easy. We do expect, by the way, by end of this year to raise some more capital, about 2,000 crores. Okay.
How much would that capital be?
2,000.
Give or take about 2,000 crores.
All right. Just wanted to understand post this merger. I presume it would take about 9 to 12 months, given the sort of approvals that are required. Right. So post this, what does the combined, growth or the growth for the combined entity look like in terms of business and then asset quality? How does that go from here?
Nothing called combined entities. There's a bank only because there's no operating business in the limited. But to your question right now, as you know, if you've seen the numbers the last few years, we've been growing about 25% per year on the loan book for a while. We guide for 22-24, but this turns out to be 25. So that story will play out. We feel that for quite a while, we feel very confident, and we'll discuss reasons if we have time. On the deposit side is what we are really hitting the ball out of the park. Our bank is enjoying a really good brand image. We are getting deposits over 45% year-on-year growth until last quarter's numbers. This number is not out. So business is looking very good, actually.
No, your deposits have grown, I must say almost savagely, 55%, I think, when you last reported. But is it becoming a little expensive, Mr. Vaidyanathan? After all, the big HDFC bank is borrowing, and that's pushing up costs for the entire sector. So how much have the cost of deposits gone up for you, if at all? And how are you likely to do, therefore, in terms of NIMs? Is the best behind you?
No. First of all, the best is not behind us. I think we'll be.
For the year. Not in terms of a decade.
No. Even for the year, we feel that comfortable that we sustain for the rest of the year our 6.41%. But to your more specific question about how the cost of deposits have moved, I'm actually very happy. I don't know how, but I know the bank has got that sort of a stage. We brought down the rates of deposits from 7% to 4%, like that. 300 basis points drop. I don't think anybody's done that kind of a cut in a long time for up to 10 lakhs. We are still there at 10%, but our deposits still surging at 44%. So just think about it. You drop rate by 300 basis points, deposit up 44%. So it's working, that's all I can say.
Yes.
Mr. Vaidyanathan, in the earlier answer, you did mention sort of the diversified shareholding, right? No promoter like ICICI, HDFC, etc. And you've made that point earlier. in terms of sort of businesses that you would like to grow on the lines of, those are two institutions you admire. Just give us a slightly, say, a 2-3 year kind of a vision. How would you like to grow, and what would you like to get to in terms of size of assets, size of business?
See, if you grow a loan book by 25% for 3 years, what the book like, how the maths work. It looks pretty good. And deposits we expect to keep, growing, but I'm in a silent period. Please don't push me on that line. I have to be very careful here. But with regard to the previous comment you made about ICICI, HDFC, these are hallowed institutions which our country is proud of. and of course the other good names as well. So once there is no promoter shareholding, there's no promoter. If you think of global corporations like Bank of America, JP Morgan Chase, no promoter. They just keep go on for centuries. So we should think of this like that, and
Okay. No, I agree. That certainly gives you all much more elbow room as a management. Just a final question, because I'm being warned we're out of time. Your risk-weighted assets are also high. And if you grow at 25%, the Reserve Bank itself has shot out a letter to everyone about unsecured loans. Would you worry that your lending is a tad riskier?
Not at all. Not at all. You should see what do you call risky. Basically, you see end of the day, your gross NPA of retail is 1.6%, net NPA is 0.6%, SMA is 1%, and just mind it, 1% SMA, free NPA stage. Really big. And it's been like that for 10 years now. So things are very fantastic. We are very careful, we're very watchful. We watch it like a hawk, that we should never have to report NPA more than 2%. So very careful.
Okay. No, it is just, as the governor said when he spoke to the directors of all the banks, mistakes are made in good times. So, I agree that the entire banking sector is moving.
No, absolutely. He's right. And we greatly respect that point of view. We really do. And in fact, after his comment, we came back and once again looked into our books, once again made a presentation to the board, and we poured over everything. So we respect that and we'll be very watchful. We are very careful.
Okay. So you expect 25% growth for how many years now? For that foreseeable 3-4 years? I'm asking you long term. I'm not asking you for an immediate guidance.
Okay, yeah. We should talk long only because I can't comment in short. But we guide only 22, 24. And, if you get there in the zone, you should be happy. But yeah, this is, you see even big banks like ICICI and HDFC is growing at 20% for a start, for an early stage bank. These are not really big numbers. They're very moderate.
Yeah, I agree. The base is helpful. Thank you very much, Mr. Vaidyanathan. We'll invite you for a more detailed conversation. There are other guests lined up for today. Many congratulations, of course, for this long-awaited reverse merger.
Well, interesting conversation, Mr. Vaidyanathan. Thank you very much. He was talking about those hallowed institutions, ICICI, HDFC. He was part of
ICICI.
ICICI.
Oh, ICICI has provided leaders across
the board. So
absolutely, and even now Sudipto Ray has joined L&T Finance. So clearly they are providing. But you have to congratulate Vaidyanathan himself. When he started Capital First as an NBFC.
Absolutely.
And then to go on first get into IDFC and then do the reverse merger, I think it's personally a very satisfactory and impressive.
And always extremely excited about the business, right? What the potential, etc. is. So great to finally see that merger going through. Not going through, it'll take time, but of course, the first steps being taken. We'll take a quick commercial break here. Up next, we'll be joined by Ameera Shah, promoter and managing director at Metropolis Healthcare, to discuss their growth outlook. Later in our special segment, Charting Trends, Rahul Sharma of JM Financial Services will talk us through some specific charts, Nifty, Bank Nifty, the NSE 500, and a few others. Stay with us.